Day trading stocks. The very first thing you want to do is look at the open. The open is absolutely critical every morning. And of course, that's what makes this difference than day trading stocks as opposed to futures or cryptocurrencies which trade 24/7. So every day, very important to look at what the open is. So what I'm going to do here is I'm just going to go bar by bar. And first of all, let me just say that I'm not using pre or post market data here. That's very intentional. We're using Amazon as an example, but you could do this with any particular stock. There's no particular reason I'm using Amazon. I am using a 1-minute chart, and that is intentional. You can see a 1 minute right up here. Not that I'm recommending you trade 1-minute charts, but for the purposes of this exercise, it's important that we look at very small time frames. So, boom, we see that price comes careening down. And what does that mean? That means that, wow, we got a dramatic change in sentiment from the previous day's close to, so there's where the market closed, was way up there, looking good, looking strong. Right? And it, but then the next day, not so good. So it came all the way from, and you remember, it closed up there. And so it came all the way down, opened there. And then even that first minute is still bearish because it closes down there. So, no so bueno. All right, so what do we say about that? Well, number one, you could say, oh, the sentiment overnight changed, and that could be very accurate. But there's another thing that we're going to lay on top of that, not instead of it, but on top of it, and that is what's called market on open orders. So I like to call them MOO, market on open orders. So you get 3 O's there. It's not just MOO, it's MOO. 3 O's. And what those mean is that it really has nothing to do with the technical analysis or the sentiment. I'm going to stick with more technical analysis of that first minute. Because market on open orders, first of all, there are people who place these orders before the market opens. That's key number one. All right, point number one, these orders are placed before the market has even opened. So they were placed earlier the day, pre-market. I mean, think there's people who work, actually have a job, right? You might be one of them, and they can't day trade during the day. And they're at work when the market opens at, say, 9:30 a.m. Eastern time. And so they say, well, god darn, my boss won't allow me to sit in front here of my monitor and day trade. So I've got an idea, I've got a concept, I think, this is what I want to do. I just want to get in. Now, here is the key. They're placing a market order. So a market order means, Mr. Stockbroker or Ms. Stockbroker, please just buy this stock tomorrow morning or in the morning when the market opens at whatever price it opens at. And remember, they're not sitting there watching it because they're placing the order before they open. And it's a market order, so they don't even know what the price is going to be at the open. So that means that takes away a little bit of the sentiment issue here. You might say, oh, it's a bearish sentiment. Well, not necessarily. Maybe they're bullish. I mean, this is what could happen. They could, let me take these lines off here. There's many scenarios. I'm just pointing out some here to give you some realistic ideas. They might say, oh, wow, Amazon, it's cranking it up. Look where it closed. It closed up here. I think it's going to break through this resistance. We've hit it once, twice, 3 times. We're coming into the 4th time, and we got a big, strong candle here. And I think this puppy is going to go careening up to the skies and tickle God's feet. All right, and so they're bullish. And so they just say, well, since I can't stay in front of my computer in the morning, I'm just going to place an order and say, like I said, Mr. Stockbroker, Ms. Stockbroker, just get me in on Amazon on the open the next day. Well, Amazon opens down here. That's the price they get filled on. And if they were bullish, well, they may not be too happy. And they're like, what? What happened? Because they bought. So first thing to understand is it doesn't necessarily represent the sentiment overnight. Number 2, it has nothing to do with the technical analysis in the morning. Now, this is again why I'm using 1-minute charts, because we're just talking about at the very, very open, like the first 1 to 3 minutes, where orders are just plowing in. And it's just people who said, just buy this at whatever price it is. It's not a limit order. That's when I say market order, I don't just mean stock market. I mean the price of the market, whatever it might be. They're not designating a price to get in. That would be a limit order. All right, so then let's see what happens. So you got that point? All right, it's not based on technical analysis whatsoever. And so then the next, oh, it's still going down. All right, next bar. Oh, it's still going down. Now remember, these are just 1 minute bars, so 3 minutes. Oh, it's going up. There's your 4th minute. Oh, it's coming back up. There's your 5th minute, 6th minute. Okay, kind of just hanging there, but still coming up. Whoop, coming up strong, coming up strong. So now, oh, okay, sentiment or whatever has totally changed in the first 7 minutes. And what are we going to do? Are we going to close that gap? This is where a lot of people would say, oh, we're going to close the gap. I know about gap closes. I'm a technical analysis genius. I Googled this, and anything that's on Google is obviously true. And so let me buy this puppy dog. Whoops, okay, pauses. That's okay, because a lot of people are buying in. Oh, by the way, well, let's just keep going here real quick. Oh, comes back down. What's happening to our gap close? We'll probably put in a cycle low, and then it'll go back up, right? Right? Hey, what the heck? Okay, so now we're well into the market. Now we're well into the day's trading. So those market on open orders, they're done. They flushed through in like the first 3 minutes. So that's done. That's happened. All right. And then it came back up. And then if somebody was sneaking a peek at their cell phone while they're working, not that anybody would do that, of course, then they might say, oh, good. Okay, it's coming back up. We're going to close this gap or close the window, as Japanese candlesticks like to say. And now they're thinking this is super. And then they pull out their cell phone, you know, in another 10 or 15 minutes. And, oh, not so super. Pretty unsuper. So, what's the dealio here? The dealio is the technique, shouldn't say dealio, the approach is what happens right within those first 1 to 3 minutes. I wouldn't give much credence. It doesn't have anything to do with technical analysis on most days. Now, sure, there's a few days where you just get the market taking off right out of the gate, and that's fine. There's always an exception to the rule. But what I'm trying to teach you is what happens most of the time, and that these first 3 minutes, market on open orders are there. It's just noise. Wait for them to get filled. Just let it flush through the system. And then I'll look for a structure. So that's the next step, structure. We wait for a structure to be set, and then we take a trade. So what was the structure here? Well, you might see this red horizontal line there if you're really paying attention and if you're super skilled. And if so, congratulations. And what that is this low from here comes in and we hit that low. So for anybody looking for the gap close, you got to consider support and resistance levels. So we had the support level, and could the gap close? It could. Anything can happen. But this is going to be your first level of resistance here. And then what we do, if you want to really learn how to trade this stuff, then you have to look for shifts in momentum and have some sort of timing tool where I've got my cycle indicator, which you give away for free. You can get that. And what you want to look for is timing. Cycle low, cycle high, cycle low. Cycle low comes in down here. So this is how we trade it. We wait for the initial flush of market orders to come through. Wait for a structure. Here what we have is a cycle high confluent with this resistance level. When you see those two things come together, that's when I would take my first trade based on price structure. Now, again, support resistance is great, but markets sometimes fly through resistance. Sometimes they bounce off of it. How do we know which is going to happen? That's where the cycle indicator comes in. It gives you the timing when swing highs and lows are going to be put in. So feel free to go get that. You can see it on the screen there. Also, by the way, subscribe to the channel for more videos, and you'll be notified every time I come out with a new YouTube video for more instructions.